This is Seth David, your Dean of Beans with schoolofbookkeeping.com, bringing to you another special screencast. This time we're talking about cash basis taxpayers are still accrual basis businesses. Cash basis taxpayers are still accrual basis businesses. I'm going to illustrate exactly what I mean by that right here. As you can see, and as I often like to do, and if you've watched more than a couple of my videos, you probably already can see what I'm driving at here. I've got a blank profit and loss and balance sheet. I've got them both run for all dates. Every possible transaction that would be on the books, if it existed, would appear on one of these two reports, or perhaps both, depending on the nature of the transaction. Point being, I have a blank company file, no tricks up my sleeve. And I want to illustrate the point of the article that I've written here about why cash basis taxpayers are still accrual basis businesses. I've had two recent experiences now, which of course motivated me to produce this particular content to help educate people about what this all really means. And first I'm going to speak about it at a high level, then I'm going to demonstrate the proof of what I'm talking about. So in the real world, I go out there and I promise to deliver a service to somebody or to sell a product to somebody. They agree to pay me for it. If the nature of the contract is such that I'm going to deliver the service or the product prior to getting payment, then I have what's called a receivable, right? That means they're going to pay me later. Now, cash basis accounting says ignore that. It's not income until it's paid, which is amazing for tax paying purposes because I don't want to pay taxes on money I haven't received as a small business, especially if I happen to have large invoices and therefore large receivables such that I may not have the money to pay until I've actually collected. I'd be out of business potentially if I had to pay taxes on an accrual basis for a small business. Publicly traded companies have to be on an accrual basis because it's better matching. And it also speaks to why it's so important to realize that even as a small business, even though you may file your returns on a cash basis, you still have to function and live in the real world on an accrual basis. I can't ignore my receivables in theory. And of course, I'm emphasizing the point here when I say this, but it's kind of true that to say that I'm going to run my book strictly on a cash basis because that's how I file and pay my taxes is ludicrous to me for the following reason. It means I should ignore my receivables. It means if I don't get paid on the spot for something, and I've already delivered the product or service, I should just forget about it because it didn't happen, right? It means that I would never call anybody and say, hey, are you going to pay my invoice? Because it doesn't exist. I don't have a receivable on my balance sheet on a cash basis, so there's nobody to call. Right? Now, of course, I'm being silly with that to emphasize the point, but now let me actually make the point. Let's say I have a business. First of all, we need to start off with a little bit of money. So let's say I'm on a shoestring budget here, and I'm going to start on 1/1 of 2015, and I'm going to deposit some of my own money, and really this should go into some kind of a shareholder distributions account or contributions account. And let's say I'm starting my business off with $1,000. Right? So then I come over here, I refresh the balance sheet, there's my $1,000, there's my shareholder contribution. Really, I'm calling it distributions. I'm not going to get into the whole distributions, contributions thing for the sake of time, and because that's not the focus of today's video. Now, let's say I go and invoice my very first customer. So I'm going to press Control-I, and we'll find the customer to pick on here. And we'll invoice them for accounting services, $1 million. And I especially want to choose a nice big number like this to illustrate a few points here. So save and close. I now have accounting services income for $1 million. I refresh the balance sheet. I've got accounts receivable for $1 million. But I only have $1,000 in the bank. So you could imagine if I had to pay taxes on $1 million of income, I only have $1,000 in the bank. I'm out of business before I've started. Now let's also take a look at the statement of cash flows to further illustrate what this really means. So let's go to Company and Financial, Statement of Cash Flows. Look what's happened. So I've got net income of $1 million, but my increase to accounts receivable is also $1 million. So when I subtract that out, I've got distributions, or really contributions, of $1,000. So $1 million minus $1 million plus $1,000 equals 1,000, right? So that's how I get from net income to cash in terms of what I actually have in the bank. So we can see why it's important to have a mechanism like cash basis accounting for tax purposes so that so the business can actually function. But if this was my only transaction all year, and let's say this person decided not to pay, right? Let's say this customer decided not to pay. So these people that I've encountered recently, and actually it wasn't the people themselves, it was the people that they were doing the books for, who apparently are trying to insist that, well, it's cash basis, so I can't recognize a receivable, and if they don't pay me, I can't write it off to bad debt. There's no bad debt because I never was really owed anything because it's cash basis. It doesn't make sense. The reality is we function and live on an accrual basis. Regardless of how I'm filing my taxes, the facts are these. I provided the service. They promised to pay me $1 million. For whatever reason, they've decided not to pay. That is the very definition of bad debt. That's what happened in the real world, and that's what I need to be able to do accounting-wise. Now, software like QuickBooks and other accounting software has in fact given us this beautiful mechanism where I can go in and customize the report, and I can say run this on a cash basis. Because guess what? Cash basis says I've got no income. Perfect. Customize the balance sheet, cash basis. I've got no receivable. I've just got my cash in the bank. So this is how I would file my tax return, right? Because I'm a cash basis taxpayer, but it's not at all how I could possibly run my business. I need to run my business on an accrual basis. That's why it's beautiful that software like QuickBooks allows us the opportunity to run the reports on both bases. In the real world, though, I run my business on an accrual basis. Hopefully now you can see my point. So that when this taxpayer doesn't pay me, and let's go ahead and backdate this invoice to 2014, let's say. Let's go back, December 1st, 2014. Save and close, yes. So now what I have is this is for all dates. So now let's run it for last fiscal year. Last fiscal year. There it is. So last fiscal year, the income shows up. If I go to this fiscal year, of course, no income, right? Because it happened last year. Accrual basis. Cash basis didn't happen at all, ever. Same thing with this. So let's go run this as of last fiscal year. Last fiscal year. And again, we're accrual basis, so I've got my receivable. Now, let's say we get into 2015. The invoice was done in December, and for whatever reason, I have a dispute with the customer. They say, I'm not paying you, right? And maybe for whatever reason, maybe I've got a big trust fund, so I'm not worried about losing $1 million and whatever the cost of that was in terms of what I actually provided to the client. Whatever the case is, let's say I've got to write it off because I'm not going to get paid, and for whatever reason I've determined it's not worth pursuing them to try and collect it. And even if it is, it might be a long-term battle, so I want it off my books. Bottom line, I'm going to book a journal entry. I'm going to record a journal entry to write off this bad debt, because that's really what it is. It's bad debt. It's money somebody really owed me that I've now determined I'm not going to get, which is bad debt. That's the very definition of bad debt. I don't care how you file your taxes. What I care about for this purpose is how you run your business. And you can't run a business in modern day society on a strict cash basis. It just doesn't work. Let's book my write-off. This is going to bad debt expense. And we'll create that. And initially we're going to create this as an expense account because that's normally what we should do. And this, of course, is accounts receivable. And I should put the name of the customer on in both cases. So we've got the customer name there. Save and close. Now, last year, accrual basis, nothing happened, right? When I go to this year, however, accrual basis, now I've got bad debt expense, right? So last year I had, on accrual basis, last year I had the income, this year I have the expense. There's a timing difference that's going to wash from one year to the next, right? On an accrual basis, balance sheet, I still have $1 million. If I change the cash, I'd still have nothing, okay? But here's what needs to happen now. Because it's showing accounts receivable of $1 million last year, if I go this year, then accounts receivable goes away. Right, because I now have the net income of a loss of $1 million, because in the current year on an accrual basis, I have the expense of $1 million, no income, so I have the loss. Notice retained earnings was $1 million because in the previous year I had $1 million of income and no expenses. Right, so again, as we cross over the year, I end up it's a wash. Right, so that's how this gets booked. Now, there's one other thing that needs to be done, because if I run a receivables report right now, I didn't want my document center. Go away, document center. If I go reports, customers and receivables, and open invoices, it's still sort of disconnected, right? And the thing of it is, on a cash basis, it needs to be connected so that it does show up properly. Because if I go this fiscal year, cash basis, it shows my bad debt expense. This fiscal year, cash basis, okay. Notice the income doesn't show up on a cash basis. And the reason for that is I didn't apply the credit to the invoice. I still have to do that. So let's go back to open invoices, and here's why. I have a credit of $1 million, I have an invoice of $1 million. They have to be married together. Notice the general journal is in 2015. That's in the current year. So when I apply this credit from this year to the invoice from last year, on a cash basis, the income recognition date is going to be the 1/1/2015 from when the credit happened. In this case, the credit happened to be produced by a journal entry. In other cases, it could be produced by a payment received from the customer. Same thing, the date of the credit or payment is what drives the income recognition date when we're on a cash basis. Let's go receive the payment. And we pretend like we are receiving a payment for a minute so that I can apply the credit. And I go discounts and credits. And let me bring it up from my other screen. QuickBooks says we've got a credit of $1 million. Looks like that's probably what should be applied here. Same amount, click done. And then save and close. There's no actual payment to receive. The receivable goes away. Now the income shows up on a cash basis in 2015. So does the bad debt expense. It's a wash. I'm not going to pay any taxes on this, especially if I'm running, and notice the receivable goes away as well. I'm not going to pay any taxes. Yes, I have income on a cash basis. Somebody's going to argue, but you really didn't have income on a cash basis because you never got paid, and cash basis says you got paid. The reality is this is how I have to function my business, though. This is how I have to run my business. I have to recognize the fact that somebody owed me $1 million and never paid me. And so I've got the bad debt expense that I've recognized that gets picked up also here on a cash basis by the same journal entry. So it's a wash, no taxable income. Now I mentioned in the write-up, and there's one case where doing it this way could become a concern. I know that, for example, in the state of California, LLCs that make over $1 million get hit with gross receipts taxes. So you wouldn't want to structure it this way because you wouldn't want to pay gross receipts tax on something like this when you never in fact did receive anything. So the way I would handle that is very simple. Let's go to the chart of accounts. Let's find bad debt. Let's edit the account. Let's make its type income so it shows up right on the top. And we could even call it something like cash basis invoice write-offs. Whoops. Right, something nice and neat like that. Then when I go here, I have my gross of $1 million, I have my write-offs of $1 million, so my total income, the thing that I'd be paying those gross receipts taxes on, zeroes out. So all I did was move my bad debt expense, rename it so that the nomenclature makes a little more sense, and move it into the same section so that I've dealt with the concern that could arise with respect to paying any gross receipts taxes. I don't want to pay gross receipts taxes. I never got paid. I'm pretty sure in an audit, this would be very easy to explain and defend. I have to run my business. I have to be able to write off receivables when somebody promises to pay and I've delivered and then they don't. I need to be able to do my accounting in the real world on an accrual basis. Notice if I go back to accrual, what happens now is I still just have now I changed it in the chart of accounts, so I still just have the cash basis invoice write-offs, right, from this year. The income happened last year on an accrual basis. So now hopefully that gives you or maybe a much clearer picture than you might have had before as to the difference between cash and accrual, especially insofar as it affects income and accounts receivable, and why, in my opinion, it's very important that even though you're a cash basis taxpayer, you still have to run your books and act as if you are what you are in the real world, which is an accrual basis business. And so I summarize by emphasizing the title of this article once again: cash basis taxpayers are still accrual basis businesses. You can't function any other way. I know I'm going to get some people angry. I know you're going to want to post your comments and feedback. Please do. I look forward to reading them and responding. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.